Certainly for IAMGOLD, ESG is a subject that we're generally very excited to talk about. We've had our zero harm vision in place. Next year, we'll actually be celebrating our 15-year anniversary of it, and it really does form a great framework for us when we're dealing with issues that are now called ESG. Back then, not so much.
Well, hello and welcome to Assay TV. I'm delighted to be speaking with Gordon Stothart, who is President and CEO of IAMGOLD. Great to be catching up with you today, Gordon, and we've got quite a bit to run through. So I'll get to the topic of ESG first, which is a perennial focus for investors with the evolution of ESG intensifying. I wanted to start with asking, how does IAMGOLD respond to the market's focus on this area in particular?
You know, Adam, well, first off, thanks for having me. And like you say, we got a whole bunch to talk about, so we'll get into it.
Yeah.
Certainly for IAMGOLD, ESG is a subject that we're generally very excited to talk about. We've had our zero harm vision in place. Next year, we'll actually be celebrating our 15-year anniversary of it. And it really does form a great framework for us when we're dealing with issues that are now called ESG. Back then, not so much, but that's fine. And it really just sort of establishes our view of how we need to behave with respect to the governments, with respect to communities, with respect to health and safety and our own workforce, and of course, with respect to the environment. And we've been working at this for a long time. It's done very well. But we do recognize there's certainly been an acceleration in the level of interest and the level of importance, I think, as well in what we do in the fields of ESG over the past couple of years. We do publish an annual sustainability report. We report on the United Nations development protocols and how we're performing with respect to those, and also speak to some of our programs. We've been well recognized by external organizations, Moody's, MSCI, Bloomberg, Corporate Knights, and a number of organizations that have actually been around for a little bit longer and looking at these issues. I think we do hold up well versus the peer group, versus other mining companies. We're a member of Mining Association of Canada. We're a member of the World Gold Council, and both of those have some pretty rigorous standards with respect to environmental performance and community relations performance and other issues of note. So we adhere to those guidelines. We analyze what we're doing on an ongoing basis and have periodic external audits that help us manage that. The social side is interesting, and we really have been spending a lot of effort on that in the past while. A couple of great programs. There's a project called the Triangle d'eau, or the water triangle, that we just completed phase one last year in and around the Essakane mine. Together with the partners, the government of Canada, the One Drop organization, and a company called Co-Water, and that brought potable water to 60,000 people in and around the mine, which is a huge thing, obviously, in that part of the world. And we're just in the midst of kicking off phase two of that program. It'll be an even bigger program, and we're looking to bring water to an additional 75,000 people in and around the mine. So exciting stuff. And as you said, it's becoming more important in the investment community. We're happy with what we've been able to do, but we do recognize we need to do more, and we need to probably be a lot more active. So internally, we're right in the midst of looking at our carbon emissions targets. We've been tracking carbon emissions for a while, but we haven't explicitly set targets. So we're going after that now. We're looking at diversity, equity, and inclusion within the company. Again, we've spoke to it, and we do recognize it. But we know that we need to do more explicitly with respect to those issues, and just try to stay ahead of the game.
Yeah, certainly. It's often the work and the data is there. It just might not have been disclosed yet to the stakeholder groups. Very good.
Exactly.
Okay, so coming to the sort of pandemic situation then, COVID and health and safety implications from there, how's your community relations program evolved in that respect to manage those impacts and with the communities you work with?
You know, it's specifically with respect to the communities, I think it really occurs in two different realms. The first is the most immediate realm. Obviously, we do have a relatively significant proportion of the workforce at our operations, at all our operations, that are community-based. We don't have a camp at Westwood in the Abitibi, but we do have operations camps in Suriname at Rosabelle and in Burkina Faso at Essakane. So we always had a proportion of the workforce was camp-based, but there was community-based workers as well. As we've gotten into the COVID situation and managing that, we have gone through periods where we had to pull the community-based people inside the walls of the camp for more extended periods of time and reduce the amount of circulation while they're on shift. On the other side, we do really, again, as part of the Zero Harm, strive to be a good community member. And for us during COVID, that's meant providing support into the communities, whether that's food, whether that's help with protocols, whether that's help with testing. We established a lab at a hospital in Burkina Faso near our mine for testing, not only testing obviously of our people, but testing the community as a whole, so that to allow them to stay on top. We provided ventilators, we've provided medical equipment in a number of different forms, and some financial support. And most recently, about 6 weeks ago, we announced that we had made a significant donation, $250,000 to a UNICEF program specifically around bringing vaccines into West Africa. Again, trying to find a way to help the whole world climb out of this situation we're in as quickly as possible, and provide real concrete support on the ground that will allow our communities to do so.
Yeah, excellent. I guess mining companies, you know, in their very nature, have got an advantage in that respect of sort of distribution, quality networks in remote locations.
Exactly. You know, the supply chain side of what we can do is part of our business. So it's not hard for us to extrapolate that and take it into the communities, you know, and continue to focus on what we could do with respect to local sourcing within the supply chain, again, to continue to supply economic benefit into the communities during a period of time when I think the whole world was obviously a little bit on their back heels.
Very much so. All right, great. So coming on to your projects now then, the Côté Gold construction, you're ahead of schedule on this as far as I understand, and started the earthworks in Q1. Are you going to be able to maintain this early progress, and what should investors be looking for as the next big milestones? Yeah,
I mean, we were very pleased to be able to announce the early start of the major earthworks. The next major milestone that we put out there is the enclosure of the process building. And when we came out with our original announcement, the schedule has that occurring in Q1 of 2022. We are working very hard. The team at site is working very, very hard to beat that milestone. Ideally, we'd ideally like to have that process building fully clad and enclosed before we get into the depths of winter in Northern Ontario, so that we can be inside that building during the winter season, doing all the mechanical and equipment and electrical instrumentation installation that can go on. And that'll really give us a good opportunity to beat the current timeline. As of right now, we're keeping our conservative estimate of H2 start to production, H2 2023 start to production. But as we move forward, and especially if we can see this particular milestone move ahead, it does give us an opportunity to do better. Currently at site, we're just getting into the last stages of camp installation. So it's been a staged installation of the camp to keep ahead of the construction ramp up. We took our first blast in the pit about 4 weeks ago now, so that's again quite exciting. Tailings dam foundation work is ongoing. We're doing a lot of work on the water diversion structures in and around the dam. And at the plant site, I was up there 6 weeks ago now, and they were just doing the final blasts in and around the process building, which I spoke to earlier. And we're now working on foundations and concrete work for that building. I'm going back in a couple of weeks, and I'm very excited to see all the progress that's ongoing.
Excellent. Okay, so coming on to the capital costs of the project, you've mitigated significant amounts of the project cost early on through detailed engineering. Could you tell us about how this occurred?
Well, I mean, interestingly, when we first completed the feasibility study at the end of 2018, our initial plan was to bring the project into the construction phase early in 2019. The market conditions weren't right for that. And in hindsight, given COVID, it could have actually been pretty challenging to have not started in 2019 and be in the midst of COVID last year while trying to run a project. We didn't shut down the project completely. We did go into a lot of de-risking, and as you mentioned, our engineering was really well advanced by the time we got into to actually announcing the project. What that's meant for us in terms of execution is the trajectory of how the project has evolved is different from a lot of projects out there, and certainly ones that I've been involved with in the past, in that we've been able to lock up a lot of the contracts very early on in the construction schedule. We're over 50% of our total spend is already committed and tied up in existing contracts. I mean, a few of those are still subject to some inflation. There are a few cost plus contracts. We're trying to nail down as much of the supply side as we can ahead of time. But a lot of those are fixed term contracts, fixed price contracts, and unit rate contracts with fixed unit rates. So we're happy with where we're at. There is inflation out there. We don't have everything tied up. Certainly steel, copper, concrete, and rebar for the steel component. And in Canada, just the cost of construction lumber is really elevated right now. So we're keeping an eye on a lot of these things, but the fact that we were able to nail down a lot of that, I think has removed a lot of the degrees of freedom, if you will, going forward as to what can go out on us. As you mentioned earlier, we've started the earthworks. We're into the foundations, and we understand what those look like now. I know there have been projects in the past where foundation conditions weren't as expected. For us, that hasn't been the issue, and sort of something else to tick off the boxes, I guess. I guess the other area we're looking at and keeping a close eye on, I mean, I have the screen open on my computer all day, is the US dollar, Canadian dollar exchange rate. About 80-85% of this project is Canadian dollar denominated. You know, when we announced the project, the Canadian dollar was at about $1.35 US to the Canadian. Our design and estimates had been done at about $1.30, but currently that exchange rate is sitting at about $1.20. We were able to layer in a number of hedges, about 50% for this year, about 25% for 2022, and about 60% for 2023 versus the original expenditure schedule. And we also have Canadian dollars on hand. So for 2021, between the hedges and the dollars that we have in our treasury already, we're about 75% covered on their Canadian dollar exposure. And we're currently working on ways we can manage that exchange rate. So it's, you know, it's obviously managing the project within the schedule and Canadian dollars that they're outlaid, but also managing our exposure to that exchange rate risk.
Yep, excellent. Some really good de-risking points there. Switching to the discoveries now, though.
Yeah.
Talk about the Gosselin discovery in the context of the broader district, and you know how you see this augmenting with Côté as well.
Yeah. So, you know, over the past nearly 2 years now, we've been drilling off this deposit called Gosselin, which is sort of within a kilometer and a half of the northeastern edge of the Côté pit. So very, very close to the existing pit. You know, we have been periodically publishing the results, and it looks very intriguing at a high level. It's similar geology and similar sort of grade profiles to what we see at Côté. We have hit some very interesting high grade sections, but we're trying to avoid getting ahead of our skis. And you know, at the end of the day, I think that there are going to be very large, good continuity sections of moderate grade material similar to what we see at Côté. So that's been exciting for us. You know, our internal target right now for this deposit is somewhere between 3 and 5 million ounces. Côté itself has 10.2 million in M&I resources, and another 3.8, I think it is, in inferred resources. So roughly 14 million ounces in all categories. And if you add Gosselin to that, you know, dare to dream we hit the upper end, we're starting to really knock on 20 million ounces in northern Ontario, 6 kilometers off the main highway between Timmins and Sudbury. I mean, you couldn't pick up a major deposit and put it in a better spot. What it means for the project, I mean, obviously it could extend the life. We already have a very robust life, 18 years there. So additional material will extend the life. You know, on a discounted cash flow basis, limited impact beyond 20 years to additional ore. However, there are 2 other aspects to it which are actually very significant from an economic standpoint. When you look at the Côté plan as it exists right now, we do use cutoff grade manipulation, engineering in the near term to elevate the head grade feed in the first 5 years of the plant, which gives you obviously very nice payback to the plant. As we look at Gosselin, understanding its similar grade distribution and the fact it actually comes right to surface underneath the shallow lake, we could probably practically be able to extend that high grade period for 2 or 3 additional years, mining at Côté, mining the upper parts of Côté and the higher grade sections there, before we start to see that regression back to sort of the average grades in the later part of the project life. So that's pretty exciting. Adding additional years of higher production is good. The other piece is, as we do with probably almost every project we do, we already have designed in what the next expansion of Côté is going to be. It doesn't necessarily mean we would always act on it, but it's much easier to design it in ahead of time and much more. It makes it a heck of a lot less expensive to build at a later date when you want to build it if you've already designed it in. So there's a couple of additional foundations in place for some of the grinding and crushing equipment. There's sufficient space in the leach area to add additional tankage. A lot of the pipes and so forth have been sized appropriately for that expansion so that it can be done at a later date. You know, within the current mine plan, 18 years, nice long mine life there. You know, we could look at within that accommodating expansion, but when you add Gosselin into the mix, it really does provide a lot of that. I believe it's going to provide a lot of the motivation and impetus to really look at when we can time that expansion in.
Excellent, thank you. And switching focus to Boto now, you've previously described this as shovel ready. Can you talk about what you envision there and what needs to happen for this to get the green light to go ahead?
Yes, it certainly is shovel ready. I mean, we published the feasibility study on Boto about the same time we published the feasibility study on Côté at the end of 2018. We have Subsequent to that, we went through a period where we were negotiating the exploitation agreement with the government of Senegal and received that in 2019. And we've been sort of managing Boto similarly to how we manage Côté between up to the construction decision, in that we've been de-risking it. So again, we've been advancing detail engineering. We know that's worked very well for us, really allows you to execute the project quickly. This year, we're spending money on enhancing the access road. The previous access road only allowed us access to Boto during the dry season. The work we're doing on the access road, bridges and culverts and so forth will allow us 12-month-a-year access. We're going to be doing some work on the camp. We're going to be doing some work on an airstrip, and we're doing some work with the communities. So it's a lot of activities that will allow us, when the project starts, to execute quickly. And in addition to that, we're looking at some other technical studies. We've been doing some hydrogeologic drilling, some geotechnical drilling in various areas, and some exploration drilling, because it's still quite a large land package we have there with some highly prospective areas. All of these things might commonly be done after you started construction, but having them done ahead of time really allows us to narrow down the goalposts, if you will, on what this project is. We're currently recosting the project. It's now been nearly 2 years since that feasibility study came out, and we want to really look at, within the current cost world, what it looks like. I'm not feeling that there's anything too out of whack there, but we want to make sure we have current costs as we're going forward. And the other piece we're doing is this, in the second half of this year, understanding that there have been a lot of announcements about new mines starting up, going into construction, or expansions to existing operations, given the current commodity prices. I've been through this before, and because of the specialty equipment involved, you can get into situations where delivery timelines can double or triple or quadruple versus normal when you get into this high construction period. So we are putting our name on some equipment, getting our names in the queue with some down payments, just to secure the optionality of when we can go forward. In the end, the decision is our own. What we're looking at it from a tactical standpoint is we want to make sure Côté is really well lined up to complete and execute as advertised. And once we're comfortable with that, we'll obviously again review market conditions. We'll have a good hard look at our balance sheet, and then be able to make a decision on moving ahead with with Boto's construction.
Yep, absolutely. Excellent. And just quickly, well, we could wrap up with looking at your producing assets. What optimization for further growth can investors look out for there within your producing operations?
Well, so I mean, one by one, I'll go through them. Essakane has their shortest life. We are doing some regional exploration there. We do have some good targets that we recognize we're going to have to bring to bear in the near term in order to really have a chance at including those within the pit life. We just completed some work on a debottlenecking project at Essakane, and we're in the process of optimizing that now. It's going very well. And at Rosebel, the natural progression of the mine plan there actually does have growth in terms of production and a commensurate drop in our all-in sustaining costs over the next 3 or 4 years, as Saramacca gets into the higher grade zones, and as the existing hard rock ore from Rosebel again gets into some higher grade zones. So we are going to see some natural ramp up in production there. And at both Essakane and Rosebel, to date, we've maintained a pretty conservative price when we're calculating our reserves. We're still using a $1,200 gold price. And that was done purposefully. Given their mature mines, we wanted cash flow to the balance sheet while we're executing on Côté and then Boto. We didn't want to be getting into any major new pushback investment at those operations during that time period. But obviously, as metal prices continue high and hopefully continue high for a long time, we'll need to revisit that. There is opportunity at both those sites to look at how we're calculating cutoff grade and certainly justify some additional pushbacks and some additional life at those operations. So we'll be looking at that. With respect to Westwood, we did have the suspension due to the seismic activity last year. We're going back to work now. We're going to be starting production here shortly. And we again at Westwood have a natural sort of scale going forward of ramp up the underground operation to really increase the production there, and continue to look at our sort of hub and spoke concept to bring in some satellite opportunities and exploit spare capacity in the mill there.
Excellent. Thank you very much for that complete rundown, Gordon. Great to speak with you and get the update on your production and exploration work. And we look forward to catching an update for Assay TV again later in the year.
Sounds great.
Thank you.
Happy to do so. Take care, Adam. Thank you.